Hey, George. Robin, how are you? Hey, Marion. Hey, Lori, good morning to you. Middle, Robert, Dennis. Hey, Lisa. Hey, Jacob. Hey, John. Hey, Gary, Peter. Hey, Mike. We're going to go over we're going to go over a few things this morning on the wedge. Make sure you understand the wedge. Jay, what's up, buddy? Making some money this morning to the downside, eh? Beautiful setups this morning. Hey, good morning to you. There, Jay, Brian, Alexander. Okay, I want to go over the wedge this morning. Make sure we understand how to do this. First of all, if you are new to the room, hey, Dion. Hey, everything's great, John. Everything's great. If you're new to the room, the numbers that I post under announcements, first of all, you'll want to pay attention to them. My first number is typically the most important number. Hey, Jerry, good morning to you. My number is called the S&P high of the day this morning already again. So it called it yesterday, and the initial balance called it also yesterday on the S&P, and called it again today. So nice short at the 03 level. Here's your target, 1296. So if you're an S&P trader, another after the pull-in bar, another 6.5, depending on your fill, 6.25 point S&P trade with 1.5 point hard stop. That 1303 number was huge resistance. If you notice, I've been putting 1303 up last week a couple times on the S&P 500. It finally hit that sucker. So I was waiting for that, and finally hit 1303, and that was major institutional resistance, and it calls the high of the day on the S&P. So remember, when I update those numbers at night under the announcement page, please pay attention to those numbers that I post. I'm looking at long-term numbers to find inflection points where I feel the market's going to turn to the exact almost tick the next day. And I was 4 for 5 last week on the S&P. So just make sure you understand that if you're an S&P 500 trader, you definitely want to watch that. Let's go to the wedge real quick. Gerald, you can record this for 5 minutes. I'm only going to go over the wedge 5 minutes here, and then we'll get looking at the other strategies. Remember, the wedge that popped up on oil, why is this a trade setup? Remember, the most powerful setup that can come in the market, the reason I designed the wedge, this is one of the most powerful strategies that you're going to encounter. Why? Because the market loves to squeeze itself into going from real wide prices into real tight prices. It causes a natural squeeze in the market. Typically, it will happen on the move will happen if the market's already in a downtrend or in an uptrend, in a continuation. Most wedge patterns, almost 75% of them are continuation patterns. So these are great continuation patterns to watch for. What's a continuation pattern? If the market is setting lower highs, obviously if you get a wedge, you want to take the breakdown like oil. The market's been setting a lower high all the way into the wedge. Or if the market's setting higher lows, you want obviously a wedge breakout like the oil wedge breakout yesterday morning for that huge explosive move to the upside. So the most important thing, like I told you, and I'm only going to go over this real quick with the wedge pattern. The wedge is very, very important. Now, I really like this one that comes up because oil was on an institutional number already. Remember, off the 1 minute chart are my institutional levels. The 1 minute chart dictates where the institutional levels, the 5 minute is dictated by the market profile levels. Well, the beautiful thing about this wedge breakdown is it's right over top of my institutional level. If you look at 0588, if you get, and I talked about this yesterday, if you played the video yesterday that Gerald recorded, if you look at 0588, this is exactly where the institutional level was. And this happened yesterday on that big explosive move to the upside also. So here's where my institutional level is. If I get a wedge, and I know the market's in a downtrend, my 5 minute chart was southbound on the Greyhound, okay? My moving averages were crossed down, I got widespread, and I get a wedge continuation, you have to take this short. You got to take it short. It's one of the most powerful patterns because what the market is trying to do, it's setting 2 lower highs, 2 higher lows. This will automatically plot for you. Now, this works on all markets, of course. I don't care what you trade. You know, you can trade pork bellies, for goodness sakes, and it's the same pattern. I've been using the same pattern, you know, for years and years and years, and it works over and over and over and over again. The beauty of this pattern is if you get it on market profile or the institutional levels that I give you, you're going to know the exact spots to get long or get short. Okay? So if you do see it over top of an institutional level, this is my level this morning. Obviously, we had a retest short here off of oil, but oil formed a nice M top. The beauty of this pattern also, it forms nice M's. If you see a nice M, this is an M pattern. There we go. You can see a nice M pattern. It's called, I call it the double tap. You'll see a lot of traders in here reference what's called a double tap. I call it a double tap. What it is, it's an M top or a W bottom. Remember, like I told you yesterday, all you got to get familiar with if you want to make a lot of ticks in the market, I don't care what you trade. I don't care what market you trade. I don't care if you trade stocks. I don't trade if you trade currencies, or if you're a Forex trader, futures trader, it doesn't matter. All you got to learn is this pattern. M tops, W bottoms off of support and resistance, and you are good to go. Okay, so make sure that you are very familiar with that. Now, the good M tops, when a symmetrical triangle pops up, I like to qualify it one way. I like to look at it and see if it does one thing. If I'm shorting, if I'm looking for a short with the tone, I like that M top, that second leg up, that double tap, to be a little bit lower than the high before the break. I like to see that because that tells me the market is really weak. If the market's in a downtrend and I get a lower high right here, that tells me the market is weak. And if I get a higher low, obviously the symmetrical wedge will pop up, and then you're good to go again. Okay? So make sure when you see this on top, of an institutional level, and you see a symmetrical wedge, remember the same thing. I said the third test of my institutional levels, it usually breaks. This is the exact same setup, only it was to the upside yesterday. Okay? So it was the exact same setup, only reverse. And it was a W bottom. Okay? And yesterday on oil too, my setup called the W top, and it called, the M top and the W bottom yesterday for the highs and lows. So make sure you understand that. Okay? Now your entry is going to be here. Your entry, once you break, is going to be a close below. I've got a lot of traders. Well, my auto trader, this is my auto trader, you can see work. My auto trader does not like to get short or long until I get a pull-in bar after the break. So once it breaks, it needs to have a pull-in bar. So here was a pull-in bar, and then my auto trader went short here, obviously. But you can qualify the pull-in bar also. If you let it pull in after you close below, you can do that to be more conservative. If you do a pull-in bar, I want your stop placed 2 ticks above the swing high after the break. Right there. Now, if you don't have Ninja Trader, this works on TradeStation too. We do have this for TradeStation, and you can do it for TradeStation also. Okay? Either or. The key to this pattern is this. When it pops up, ask yourself, okay, do I have an M top? Yes, this break's going to be valid. Okay? It's that simple. Once it forms, automatically plots, you got yourself a nice trade. Okay? Now, this works on the euro. Here's another little trick on the euro. Trade just happened also. Okay, here's a euro. Same exact setup. If you look with the euro, we same exact scenario here. On the euro, we had divergence dots, those big giant red dots that pop up on the 5-minute chart. This is what happens a lot. And here's a little trick for you. Yeah, these are all on the 110 tick. Yep, 5555, Jacob. Yep. You got it, buddy. On the euro, the same way. The euro is the exact same way. This morning, just a second ago, it happened on the trade. This is a time-of-day trade. Okay, 8:50. Remember, my time-of-day trade to trade these markets. If you see a wedge that pops up in my time-of-day trade, my time-of-day trade zone where the algorithms like to really hammer the highs or lows in the market is right here, between 8:50 to 9:10. Okay, so remember, 8:50 to 9:10. If you see a symmetry wedge come up at 8:50 or 9:40 or 9:50 to 10:10 or 10:40 to 10:50 or 11 to 11:15 or 10 to 2 to 10 after 2, you better trade it. Okay, this is a euro. Okay. So make sure that if they come in the time-of-day trades, then make sure the time-of-day trades, we're in a time-of-day trade right now, Okay? So if they come up, make sure you go to work. All right? This is the euro. These patterns are all the same. They're all the same. Now this is not a defined M top, right? It's not a defined M top. You can see the difference in the patterns from the oil and then the euro. This is just a lower high, higher low, and a breakdown. Now once again, I like to see a pull-in bar, then it goes short. You can let it just close here at this level to get short. Place your stop 2 ticks above the swing high. If you're going to trade the Symmetry wedge, there's your stop. Make sure your stop is 2 ticks above the swing high. Obviously, the market just, my Symmetry wedge nailed the short on the euro. Okay? All right, patterns, right? So it doesn't take a brain scientist to understand how these patterns work. All I'm doing is I'm looking at lower highs and higher lows that happen off a smaller time frame, off support and resistance. And when these patterns pop up, that's when the algorithms go to work. And the same thing with the British pound. If the British pound right here, if you look, we had major resistance. We had major resistance. We had 2 wedge opportunities. This wedge right here, if I was not already short, this is a beautiful one right here. The second one too, because this was on my what? Institutional number. My institutional on the British pound, my market profile was 61.51. 61.51 right here. 61.51 right there. Look at the wedge. It pops up right on my institutional level. Well, the British pound was in southbound on the Greyhound, right? We're below all 3 market profile levels, and you get the wedge pattern. Once again, you can enter here or enter here off the wedge. What the wedge likes to do also, the wedge automatically computes, is sometimes you'll get a triple tap right here. What a triple tap is 3 lower highs and 3 higher lows. I have it programmed for 3 lower highs and 3 higher lows. Okay? So when that happens, you can also, if you see this, that's a powerful indication that the market's going lower again. So you can look at getting short the market again. Okay? And then here's the really good one right here that I really like. You have 2 lower higher lows, 3 lower highs, and then you get the ultimate breakdown because it's on an institutional level. I cannot stress enough, if these automatically plot on your own Ninja charts and they're an institutional level, you better trade it. Okay? All right? You better trade the setup. It's a really, really powerful setup off of an institutional level, especially if it's with tone. Okay, if you look at the breakout this morning, it's another wedge pattern. Okay? This is on oil again, and you can see consistency in the pattern. The pattern is the same exact setup. Same exact setup, okay? The consistency in the pattern is the exact same. When you come down to support or resistance, okay, this was on support. Now, once again, I have had institutional support right below me. I have institutional support right below me down here. This morning, I'll just drag this one down. Right there, institutional support below me, right? So if I get a wedge pattern off of institutional support, then obviously what you want to do is look for buy breakouts. Okay? If it's support, all right? So if it's down coming on support, a wedge comes, you can look at taking the breakout here. Remember, I like to, what the auto looks at is I like to look for a close above it and then a pull-in bar. There's your pull-in bar. And then it likes to go long. That's how I qualify it. Okay? You can actually let it close above it right here. What I do manually is you like to close above it, and I'll put my stop 2 ticks below the swing low. Oops. Right there, 2 ticks below the swing low, and then you're good to go. Okay? Same pattern, higher low, lower high. If you look, and Jerry, you shut this off after this, what happens at my resistance? If you're an S&P 500 trader, what happens at resistance? Look what happens at resistance. Okay? If we had a long breakout this morning from the wedge pattern at 6 o'clock this morning for you morning traders, when the trend was up, it actually caught this, my auto system caught 97.5 long all the way to 02.5. But look at 03. I gave you this number all the way last night. 6 o'clock to 7 o'clock last night, I give you this number. All right, that's when the market's all the way down. It's way away from the market, way away, right? We're 12, 13, 14 ticks away from it. 14 points away, I'm sorry. How do I call that high? Because I look at long-term numbers, okay? When you come up to an institutional level, this is the number I gave you last night that would be the high in the S&P, right there. When you come up to it, okay, when you come up to that number, if you get a symmetry wedge, again, look at the tightness in the market. Look at the tightness. You have a lower high, and you have higher lows, and then just stick a fork in the market. Look at that. Look how pretty that is. Okay? It works in all markets, guys and gals. I don't care what you trade. If you understand to look for this wedge on institutional support and resistance, okay, that's all you got to do. All you got to do. Not only do we trade off my institutional support and resistance, right? I just shown you 4 markets for back-to-back trades on the wedge that worked out. So you got to make sure that not only do you trade off the MP levels and the institutional support and resistance, right, because those trades are qualified on support and resistance. You can qualify your symmetrical wedges. You don't have to take every wedge. You can just take the ones that are on major support or major resistance. That's it. Okay? All right, Gerald, turn that thing off, please. And go ahead and render that and send that out to everybody if you can't. Make sure they understand where the wedge, their stop is, and their entry. Remember, the entry is the close of the wedge and then 2 ticks above the swing high.